the most volatile commodity for the last year has been crude oil. Let us take a recap of what has happened in the last 1 year and what is expected of crude oil over the coming months or so. So in the last 12 months, we've seen crude oil prices surging for the first half of the year, and for the last until September, October 2018, we saw crude oil pricing hitting highs of about $85-86 for the Brent price. But over the last couple of months and precisely 10 weeks, prices have been correcting and are down 40% since highs, trading currently close to $55-56 level for the Brent and close to 45-46 levels for the WTI. We expect that this kind of fall is what was not anticipated by most of the market participants and is taking everybody by surprise. What triggered this fall is the start of sanctions between US and Iran, followed by US and China trade war tariffs, slowdown in global equity markets, global financial markets, growth slowdown forecast for next year and for the next couple of quarters by leading agencies, and what is already seen in the last couple of quarters in terms of slowdown, and also largely oversupply glut which is coming out from the US and even from the OPEC nations, and that has led to a very excessive supply in the market and has pressurized crude oil prices largely. But I firmly believe that more than the excessive supply in the market, the actual cause is the financial risk aversion or the investor sentiment which has pushed the prices so lower or has corrected so sharply. I think over the next couple of months we can expect that crude oil prices would come back to normalcy. The latest EIA and IEA monthly report shows that demand is likely to pick up over the next couple of quarters, and it will be very sharp in the next quarter, precisely that is the first quarter of 2019, and also some bit of slowdown could be happening from the US front, where we have seen massive surge in production, and at these prices it is no more very lucrative to keep on adding production, so we can expect some bit of slowdown in production from that angle, and also 1.2 million barrel of supply cut from OPEC and other OPEC nations is largely expected to get the balance in the market, which is in a oversupply scenario at the moment. This makes our bet a little more comfortable in terms of an upside in crude oil prices, where we expect that over the next couple of months there could be a possible 10 to 15% upside in prices. For the WTI, we are expecting that $50 to $54 could be on cards, and for the Brent, we are expecting that $65 to $66 is where we can expect Brent crude oil prices to be stabilizing over the next couple of months. The difference between the two is likely to continue at around $8 to $10, and we expect that there is no kind of shrinking happening in this. So a spread trade is not advisable between the two, but however, any dips could be an opportunity to capitalize on the fall and can for quick gains of about 10 to 12%. Thank you.